Hey guys, welcome back on the channel. So these are a couple of liquidity positions I have in this same pool, Fartcoin paired with Sol. I think this pool is yielding quite good. It's a meme coin pool, yeah, but it's somewhat of an established meme coin pool, and I've been testing it out for the past few months with really good results. Now that being said, don't jump in just because you're seeing someone on YouTube doing this. Don't jump in, you gotta learn the tricks of the trade, learn how to play the game. There's many more liquidity pools here which would be more tailored for especially complete beginners. For example, Solana paired with USDC. This is a highly profitable pool. It has tremendous volume to TVL ratio. You see the volume is 3x roughly the TVL. That means it will print. Pool fee tier 0.04%. It's good, but the kicker here is the volume is always crazy high on this pool. And I'm showing you Orca, but you can yield farm this pool in many other DEXs on Solana. Orca is one that has the liquidity terminal, which I'm going to show you in a second. It makes everything super easy for beginners in order to set ranges. So for example, I have this smaller position here. It started with $30. I've been yield farming it, I don't know, probably around a month. It went up and down, and this is the yield that it has been accruing for the past 4 to 5 days. I haven't touched it, but this is what you can expect. Around 1% a day. This is a bit higher, but sometimes it goes out of range. So at least 1% a day in these type of pools. And don't forget about this here, the liquidity distribution. This is extremely important. Right now, I'm performing even better on this pool because you see this bigger block here. This is like where there is more liquidity deposited. So there's going to be more competition, more people competing for the fees being generated in between this price range. I showed you how these hollow spots can really boost your yield if you pay attention to those. And right now the price has been on this hollow spot, so it's yielding more. When it goes up to this spot, you'll see that your APR will tone a little bit down and you'll earn less fees. But essentially, even with going in and out of range, my range is a bit tight, yeah. You look at it, it's overall 5-6%, probably more close to 7, but in any case, it's still a tight range. But it has been working really good for this liquidity pair. Every liquidity pool, every liquidity pair will have its own preferred range or its own optimal range. This has been working quite well. But for example, in the past, the 25th, the 25th of June, the 25th of June up to the 27th. So a couple days were that, as you can see, the price is under my downside. So I was out of range, not generating fees. I didn't bother even to touch it, to rebalance it, because if the price would have kept outside of my range for more than 2 days, then yeah, I would have reassessed the situation, probably rebalanced, made a whole new range. But I just waited, I looked at the chart, I saw that there was a high potential for the token to keep rising in price, although we're not all that far from all-time high here, which would be at around 85 to 90-ish in the price range. But yeah, this is a floor that I looked at the past in the chart and it did tend to hold with some reliability. So I decided to keep the liquidity position untouched, and here we have it. After the 27th, we went in range once again, and now in here in the 29th up until the 30th. It was not even 24 hours, it was much less than that, but it went out of range at around midday of the 29th, and then it went back into range at 10 a.m. of the 30th of June. So you see, you don't need to keep rebalancing at the exact moment that the price goes outside of the range. Chances are it will bounce back in. You just have to wait it. And the thing also is very important. If you see that every single day you're rebalancing or you're out of your range, the price goes out of your range every single day, every 24 hours or sooner than that, you are probably playing with too tight of a range. Like I said, it mostly depends on what type of pair we're looking at. Fartcoin is really well correlated with Solana. When I entered this pool, I entered it because I saw the correlation. It was off the charts and I was okay. It's a meme coin, but it's a somewhat established meme coin, so I went with it. And still, I'm showing you here very conservative positions. I'm talking about under $100. But even if you have 5,000, 10,000 to invest, start small until you learn the tricks of the trade. Start with something that if things would go south, if things would go bad, you wouldn't lose sleep over it. That would be my advice to you if you want to test out yield farming, liquidity mining. But I believe this is one of the best ways to generate passive income in DeFi. So as you can see, the pending yield on this pool is much higher, although the position is worth roughly 50% less, and that's because I haven't touched the yield here. I didn't harvest it for probably around 3-4 days, like I said before, 3-4-5 days. Now this is also a position that I opened, and let me show you what I was doing here. So let's go on liquidity terminal. So you see here I deposited this as 100% Solana when the price was at around 74. It was clearly above the 70 price range. So it was 74, probably it was even at here 76, and this is somewhat of a top, and sometimes, or it's very often, when it reaches this price level, the chart then takes a little dip, which will then pick up again. But I had this position set here just waiting for the price to dip, so I deposited 100% Solana, and I tried really to tighten it up here to make it match with these hollow spots, because my goal here was, if eventually the price would dip from this more anchored in liquidity distribution, I would start earning yield much higher than in comparison with this more solid liquidity block here, because of what I told you already. Less competition here, clearly, much less liquidity being deposited in this price range. And so what happened is that you see there was this sudden candle here, which in practice, it had put me at around this price range here. So we were talking about 69, very close to my downside, but I didn't bother. Even if it would kept going down, I wouldn't bother, because I was fairly sure that the price would be bouncing back up. Now, it generated automatically, I remember it was around 30-40 cents just in fees from this sudden dip, and that wasn't enough to break even. This position was worth $55 roughly worth in Solana, so the fees that I was making, I was still at a loss, but I held on to it because I was expecting this to rally up once again, as it did. Now I'm very close to the top of my upside, and if we come here, yeah, so right now I'm in a small profit. The current balance plus the pending yield surpasses $55, but this was a position that I just opened because I had some Solana sitting in my wallet. I thought, okay, so this is a very reliable liquidity pair. It has nice volume. Let me go once again here into the liquidity terminal. So the volume 168, TVL 80,000, so pretty much double than the liquidity. It could be better. There are pools which have a much higher volume to liquidity ratio, but 2-to-1 is already very, very good. Also, extremely well correlated pair, established meme coin, yeah, so I wasn't expecting this to die overnight. And probably, potentially, if I would have been yield farming this just from the beginning of 2025, I would already doubled, tripled my initial just in fees. Okay, so this is what I wanted to share with you. If you have some Solana sitting in your wallet, you want to make it work, choose a reliable liquidity pair, and also look at these points in the position where there's less competition, when there's less liquidity being deposited by users. Deposit your Solana there. If it is under the current price of the token, you'll be able to deposit 100% Solana, right? Then you just have to pay attention to it. If it is a solid liquidity pair, if it is something that has high volume, and we can find a lot of these pools here, I mean, you can definitely make some nice profits even in a short amount of time, a day, a couple of days, a week. But also sometimes, depending on the market condition, if the price keeps sitting above that range that you just opened. That was the case with me, by the way. With this one, it just sit there, or was sitting there for very close to a week. I think I opened this 5-6 days ago the most. So for the most part, it was just sitting there. Yesterday at night, the price dropped in. So it was in range. It started generating fees. And actually, this is the best case scenario. When you set up a range, the price drops and then it bounces back up and potentially goes above on the upside. You can close the position, of course, take that yield, and yeah, everything will be on the green because you just made a good trade, okay? So Fartcoin, Solana, very reliable liquidity pool right now. This would be a more conservative one, Solana with USDC, but this one yields quite a lot. You see the average APR here is 0.1% a day, With tighter ranges, you can get more than this. This is an average from all of the liquidity providers in the pool. And then there's other very solid pairs like GLP. Actually, where is it? Yeah, here it is. GLP paired with Sol. This is also a good one. Wrap Bitcoin with Solana. Good one as well. So you're likely not gonna get 1% a day with this one, but there's other factors that you might want to be considering. So for example, also here with Bitcoin paired with Solana, you can even go with a different one, CBBTC, here it is paired with Solana. This has a higher pool fit here. Potentially it will yield more unless this one has a much higher volume. Usually these pools with blue chip assets, they're not crazy high in volume. They will have spikes here and there, yeah. So some days will definitely be worth it in the shape of fees, but you'll not get insane yields of over 1%, 2%, 5% a day with these pools. What you're getting is small drops of blue chip assets, which in the future, let's say Bitcoin price doubles, let's say Solana goes to 200 again, to 300, likely these, since they are very well correlated, it will not go out of range. And you're just still holding both assets. For high yields, there's definitely some very interesting pools here, but if you're completely new to the game and you want to try some high yield pool, I've been having really great results with Fartcoin paired with Sol. For example, this one, Pengu with Sol, also looks really juicy. Highly likely you'll get over 1% a day with this one as well. Useless and Sol, yeah, definitely over 1% a day. Even with a wider range, probably this one, it would be safer to have something at around, yeah, 20% range, and even that might be a little bit too tight. So yeah, I'm not sure why this is not loading. Let me try to refresh. Okay, it's a shame because I wanted to look at the chart to see if the range would be enough or 20% even would be a bit more tight. Probably this is a position that needs at around 30%, if not 40, 50, in order to keep you in range for the most part of the day. But yeah, this will definitely be more risky. So basically that's what I wanted to share with you. Established meme coin pools can yield you easily over 1% a day. If you're looking for blue chip stuff, you'll likely get yields much lower than that for the whole span of the month. On average, of course, there's going to be spikes, days where you'll see tremendous results, definitely. But yeah, just wanted to share this with you. If you have any questions, let me know in the comments, guys. Thank you for watching. Hope you took value from the video. I'm going to wrap this one up. Keep exploring crypto. Take care. I'll see you on the next one.